So today we start with investing activities of cash flow. This is the second type of activity. First is operating, then we have investing, and then financing. Investing, as the name suggests, where are we investing our money? We invest our money basically in fixed assets. And if we have something extra left, we make investment with that amount, preferably of a longer duration when we are talking in this chapter's context, because current investment is a part of cash and cash equivalent. So investing activities is to find out the inflows and outflows of investing activity. So to find out the fixed asset purchased, we get an outflow. When we find out the selling price or the sale amount which we received, that gives us an inflow. Similarly, investment can be purchased, that's an outflow. Investment sale is an inflow for us. All this we need to determine. Simply, if you are given that machine for 2 years, the data is given. In previous year, it was 40,000, and in current year, it turns out to be 50,000. So there is a purchase of 10,000. This is a normal situation. When you're purchasing, it leads to outflow. Outflow is written in bracket. So there is an outflow of 10,000 under investing activity. Very simple example. They can add points to it. Now here they gave the net value of asset. They can also give you the gross value, the price at which you acquired it, and what is the depreciation charged by you on the same. So let's look at our example 2. Here you are told machine was 4050, that same I've taken as previous one, but they added 1 point provision for depreciation, or the word used could be accumulated depreciation. It was 4000 in previous year, now it becomes 5000. This tells us two things, no other additional information given to us. Okay, this means that there is a purchase of 10,000 for machine, which is our outflow, same as previous example, investing activity. But along with that, we have one more thing, depreciation during the year. This is that depreciation which we show or add in our operating activities. In operating activities, we add the depreciation. It will be this depreciation charged on this machine during the year. Case 3. As of now, there were no additional information. Let's try to add that to this. Say during the year, machine costing 10,000. From here, there was a machine, not the new one. Some machine was there which was purchased at some time for 10,000 rupees. After using it for so many years, you have charged 6,500 as depreciation on that. So accumulated depreciation on this asset is 6,500. 10 minus 6, 4,000 minus 500. 3,500 is, this was purchase price. Remember last year depreciation. Depreciation till date of sale is this much. This is your book value on date of sale. So book value on date of sale is 3,500. It is sold at a loss. So minus 1,000 loss gives me selling price as 2,500 rupees. So this is cash inflow due to of investing activity. Let's look at the asset account, machine account we are preparing. Previous year balance comes on this side as opening. Current year balance comes as closing balance. You are this calculation which we made, sale comes on credit side. Loss also reduces the asset. These are asset decreases, and debit side increases will come. Provision for depreciation 5,500. 6,500, sorry. This is depreciation on asset sold by us. We have sold a machine of 10 on which depreciation was 6500. This is that depreciation. And we will get a balancing figure of 20,000, which is purchase. Purchase is an outflow. So in this investing activity, if we see, we have received 2500, we have given 20,000. So this is an inflow, this is an outflow. 17,500 is the net cash used by us in investing activity. Let's see provision for depreciation account also. This is a liability account. So there, if we see in asset, brought down was on debit side. In liability, brought down is on credit side. This is opening balance. This is closing balance. These two are given to us in the question. Here we put fixed asset. This is same. These two are cross posted. This is depreciation on asset sold. Because asset is sold, we are taking it away, liability is reducing. When I reduce that, I get balancing figure, which is 7500, which is depreciation during the year. So that means on all the assets which we have used during the year for different durations, we have charged depreciation 7500. This 7500 is added in operating activities under the mnemonic which we have been using while. This is that depreciation to be added in operating activities. I repeat, 40,000 machine you purchased for 20, that's coming as balancing figure. The tick mark things which I am giving you are given to you in the question. This is your balancing figure. This is sale, this is loss, this is depreciation on assets sold. If you will do this total, this will come as 10,000. So there is a purchase of 20. And how do we get depreciation during the year? You prepare accumulated depreciation or provision for depreciation account. It's brought down, or previous year, or you can say opening balance comes on credit side, closing balance comes on debit side. This is depreciation on assets sold. Either this or this, one of the two will be given to you. The other one you have to find out. If they would have given depreciation during the year, you would have calculated this and you would have got the profit loss on sale of asset. Then let's come to the next thing. Example. Here one account is asked. Previous question was gross value given. Here net value is given. When net value is given, we prepare one account. When two are given, we prepare machine account and accumulated or provision for depreciation account. Now here what we see is we have brought down here, this is given to us, carried down given to us. During the year there is a machine of 15. पिछले question में 10 था, this is 15 with accumulated depreciation of 12. 15 minus 12 gives me 3000. Was sold at a loss of 1, that means I've got 2000. So this 2000 I put here, this 1000 loss I put here. Then P&L depreciation. This is depreciation during the year. This is usually given to us in the question. This is not on asset sold. The common error could be we can put 12,000 here. 12,000 is the depreciation on assets sold required to calculate only the profit loss. And the balancing figure 19,000 is purchase. So if I see the answer in terms of investing activity, I get sale for 90, sale for rupees 2000, purchase which is an outflow of 19. So net, I have net cash used in investing activity is 17,000 rupees. And this depreciation will be added in operating activity to my wild under D. Now we come to the example of investments. As of now, we were seeing asset investment. So investment again is asset. Opening balance or previous year balance comes here. Closing balance or current year balance comes here. These two are the balances. Now, during the year, investment costing 5 was sold at a profit of 1. So, what are we getting on sale? 6,000. Sale reduces asset. I put it on credit side. Profit comes on debit side. Loss comes on credit side. We were putting the loss that was leading to. Actually, the word used is P&L. Reason is loss. So here reason is profit. Word to be used is statement of E&L. So 1000 profit goes there. So this 35,000 is my balancing figure. This is purchase of investment. So we have purchase outflow of 35,000. There is a sale of investment 6,000. So net 29,000 is cash used in investing activity. Investing activity, what are the typical things that we have? Let's quickly write that down. If this investment would have been sold at loss, then loss would have come on credit side and balancing figure would have been purchased. This is another example given. I'll share this document. You can practice that. So investing activity inflows are sale of fixed asset, sale of investment, and outflows are purchase of fixed asset and purchase of investment. So these are typical things. Outflow come in bracket, but investments which we make come with an, we can invest at different places, in cash or in property. When we invest it in shares, debenture, etc., we could interest or dividend could be received by us, provided we are not a finance company. And on building, it could be rent received. So these are other things up of inflow. They may not be there in all questions. It is deducted in our operating activity and shown here. Is that clear? If we have goodwill, goodwill when it increases, decrease we all know comes in wild, but when it increases, it is purchase of goodwill. That also comes in investing activity as outflow. Practice all solved illustration from Grewal book relating to investing activities to make this topic strong. So let's quickly look at all that we have done. We can be asked to prepare account here of either fixed asset or fixed asset plus accumulated depreciation, or it could be investment account. Let's look at the format. If it is only one account, fixed asset account, brought down, which is your previous year or opening balance comes here, carried down, closing balance comes here, current year amount. Bank purchase comes on debit side, P&L profit comes on debit side. On credit side, we have bank sale, P&L loss, and we also put here any depreciation during the year on all assets. Here, if we have one account, this is the format. If we prepare two accounts, the format looks like this. We will have one fixed asset account. We will have accumulated depreciation account. Accumulated depreciation brought down comes on credit side, and fixed asset brought down comes on debit side. Opposite is for closing balance. We have here depreciation during the year on all assets, which is used in operating activities. Hint, I have written operating one. And Here we have depreciation on asset sold by us. This goes to fixed asset account. In fixed asset, this comes as accumulated depreciation. What decreases our asset is bank sale, and what increases our asset is bank purchase. Profit comes here if we have, and loss comes on credit side. Similarly, for investment account, brought down comes here, carried down comes here. Sale comes here with selling price, loss comes here, profit comes here, purchase comes here. We can also be asked to calculate interest on investment. That will be treated just like the debentures. Say 5,000 is closing balance, opening was 4,000 for investment, let it be 10% investment. Investment purchased on first day, then 5,000 into 10% is interest received on investment, which will be our investing inflow. So that's about investing activities.